This is exactly why we track politician stock trades. Now, Brad Knott, a sitting US politician, just made a suspicious stock purchase in a company called Secure, and is already raising eyebrows. Hi, I'm 8 and I built a 400k plus portfolio in just under 5 years in my early 20s by using Warren Buffett's value principles, my bachelor degree in finance and investment, and my real estate cycle. And today, I want to break down why trades like this actually matter and what I see when I analyze the company itself. So here's the story. Now, Brad Knott sits on the committees that touch on financial regulations. Earlier this year, he bought shares of Secure, a company that makes metal payment cards for big banks and fintechs. Now, on the surface, it looks like just another investment, right? But here's the catch. Since his purchase, the stock jumped 70% on news of new partnerships, and the timing feels almost just too perfect to be real. Now let's put Secure to my filter and checklist. Now the company's moat is pretty good. It has a niche in premium metal payment card market, which it dominates, supplying to big players like Amex and JP Morgan. That alone give it some brand and switching cost advantage. Now moats only matter if the financials actually back it up. Now looking at the financials, the company's revenue growth has been a bit lumpy. Sometimes strong, sometimes flat, sometimes pretty negative. Now, profitability is actually quite mixed, with net margins below zero for quite a few years, which is a lot under my 10% target. Now, looking at debt, it's also on the higher side, with liquidity pretty bad and low. So overall, looking at all the metrics, currently it doesn't really meet Warren Buffett's bar of PE ratio under 20, low debt, and consistent high returns on equity. So a question, why would a politician even jump in and invest into the stock? Maybe he believes in the contracts pipeline due to his brother, Thomas Knott, being a director of Secure. Maybe he has insights into regulation that could benefit niche card providers. But that aside, here's my cycle take. We're currently near the end of the real estate cycle, which means small cap, thin margin businesses like Secure will be among the first one to get punished in a downturn. Even if the short-term insider trade makes money, it's pretty risky as a long-term hold. Therefore, for me, if they don't meet all of my value criteria and also cycle criteria, I don't invest. Well, there you have it. I do break down these kind of trades, combining Buffett's value principles and cycle timing every single week in my free newsletter, link in bio. A question, do you think politicians should even be allowed to trade individual stocks while in office? Comment down below, I'll be reading.